Vaibhav. In today's session of Market Movers, we will see the euro, which is resuming its uptrend. After yesterday's ECB's monetary policy announcement, we saw a sharp up move in the euro, which has taken the euro USD to 1.19, and then afterwards it has cooled off to some extent. But in today's session, it is able to hold above 1.18, and it increasingly looks like that now we are going to see the resumption of the up move, and in due course of time the euro USD is likely to move towards 1.2 price levels. If we consider the trading context for the day, earlier in the day we got the multiple releases coming in for major economies of the euro area. We also got the inflation data for Germany, but we will not go into the details of that, as that was the final reading and not much of a revision was there. And for United Kingdom, we got a lot of data, including industrial production, trade balance, GDP numbers, and manufacturing production as well. One key takeaway from these many releases for UK is that as the time is progressing, we are seeing improvement in the economic activity, and as a result of that, the GDP for 3 months ended July has improved, and the balance of trade is also on the positive side with surplus of around UK pound 1.1 billion, and the industrial production in terms of month on month has risen for July, though in terms of year on year it's still on the lower side. Now moving on to the US data, we got the CPI for the month of August, and here there is a marked improvement, and for the month of August the inflation rate now stands at 1.3% in terms of year on year, which is also a lot better than the prior month reading of 1%. And in terms of month on month, the inflation has gone up by 0.4%. So both the counts are suggesting to the rising prices in the United States, and that's improvement as the consumer demand is picking up, and economic activity is starting again. Now let's shift our attention to the technical outlook. First we will cover the Euro USD, and then we will move on to the gold. Let's start with the Euro USD technical outlook first. This is the daily time frame chart for Euro USD, and this price zone, identical swing lows around 1.175, is indicative of the fact that Euro USD is in this consolidation phase, finding support above 1.170. Even in earlier occasions, we had this reversal happening pretty close to this 38% Fibonacci retracement, and at that point in time, this Fibonacci retracement of course wasn't there, but this price zone of 1.17 has been crucial, and on almost 4 occasions we have seen reversal above it, and I think this time around also the chances are that we are likely to see Euro USD heading back towards its immediate swing high, which is there around 1.20. Even in yesterday's press conference, Ms. Lagarde didn't really talk down the euro, and after the monetary policy announcement and press conference, we saw euro shooting up, though those gains were later on erased, and the euro actually got back to the lower side. But now in today's session we are again seeing some fresh buying momentum closer to 1.18. So I think looking at that, we can indeed bet on the long side trade, but the near term hurdle remains, which is the central pivot point of this month's pivot point series. As you can see, on both the occasions Euro USD tried to cross above it, but it didn't really succeed, and we saw it reversing on the lower side. But I feel that in due course of time the Euro USD is likely to get past it, and on the lower side all we need to do is watch out for this immediate swing low zone, and the price level of 1.18 is going to be of crucial importance from that perspective. If you consider the regression curve, we had this flattening of the regression curve, and now as the price action is again shifting to the upside, we are seeing a slight upward shift in the regression curve, and that's also bodes well for our assessment of the possibility of Euro USD moving on the higher side. If we go to the lower time frame charting, here we have these 50, 100 and 200 SMAs converging just little above 1.18, and I think the price action, as you can see, has been able to cross above the 200 SMA. It hasn't really sustained for long, but the shift on the upside is kind of remarkable, and as you can see here, we saw this turnaround happening closer to this 1.175 zone, and from there on the Euro USD has been able to hold above the 100 SMA. So we can utilize this 100 SMA as our immediate marker. As long as the price action is taking place above it, I think we can continue to look for the fresh buying opportunities in the Euro USD, and unless and until there is a significant break below this 100 SMA zone, we don't really need to be much bothered with these volatile moves in the Euro USD. As long as the underlying momentum remains on the bullish side, we can continue to bet on the possibility of Euro USD again resuming the uptrend and moving towards, as I said earlier also, towards 1.2. So from that point of view, all we need to do is figure out what is the appropriate level to get involved for a fresh trade, and in that case I feel that in today's session, if we are going to go for the fresh trade, then we will of course have to watch out for this 50 SMA zone, and unless and until there is a break, as I said, below this 100 SMA, we can continue to look for the buying opportunities. So watch out for the price band of 1.181 to 1.183, and anywhere in between, if we can get the fresh buying opportunity for today's session, I would think that that would be an optimum level to get involved for the long side trade, and on the lower side we can keep the stop loss anywhere closer to 1.179 to 1.178. So for a risk of around 30 pips, we will be in good position to almost catch 70 to 80 pips on the higher side, as our immediate target can be kept closer to 1.19, which is also the immediate swing high for the Euro USD. Now let's shift our attention to the gold. We will see the technical outlook for XAU in terms of US dollar. So this is the daily time frame chart, and here also the gold has been consolidating in a very narrow range, as you can see from the convergence of these 10 and 20 EMAs closer to 1950 level, and here we have this consistent buying support closer to US dollar 1900 per ounce level, and from those levels we have seen a reversal happening. So here, unless and until there is a break on the lower side, I think there is a upward momentum which has been continuing in the gold for quite a while now is again likely to sustain, and we might even see the gold getting close to the US dollar 2000 level, as I said in yesterday's session itself. So we will see what are the emerging possibilities for us to look at, and from that perspective we have to indeed watch out for these central pivot point which has acted as immediate resistance in yesterday's session. Yesterday also I had pointed out that this is likely to act as an immediate hurdle, and now looking back that proved as I had anticipated. But in today's session, not many things have changed. Of course, we are seeing that gold is trading on the lower side, but on the lower side, closer to US dollar 1940 per ounce level, it has indeed found some buying momentum, buying support, and there is no significant break on the lower side. So I feel that this consolidation phase can indeed be utilized to look for fresh entries for again the move towards the upside, and this regression curve is also showing some momentum on the higher side, and in that scenario we can indeed look for fresh trades to go long in the gold. Coming to the hourly chart here, the chart is not really much different from the Euro USD, and that's one of the reason is that the gold is the second uh, part of this pairing, and because of that these valuations are depend on the gold's momentum as well, and gold, sorry, the USD's momentum as well, and the USD has weakened, and because of that the gold as well as the Euro USD, oops, uh, I think I have messed up, but here now we get back to the technicals, and coming to the price zone of around US dollar 1940, we can utilize these prior swing highs, and here the immediate buying support has also been closer to these prior swing highs. Now that we have the break above these prior technically important levels, I feel that as long as the price action is taking place above the 100 SMA zone, which is there around US dollar 1937, we can indeed look for fresh trade opportunities on the long side, and if we are going to go for the buy trade, I feel the price band of US dollar 1940 is an excellent choice. So if any of you had gone in for any trade earlier in the day around US dollar 1940, you can continue to hold on to it, and in coming sessions we might even again see the gold retesting the immediate swing high, and eventually even getting past it the levels of 1970. So here in today's session, now that today is also the Friday, so we have to be mindful of that fact, but maybe if we can get it then well and good, otherwise we will have to see how the trading starts on Monday and on what level we get the gold. And I think the price band of US dollar 1940 to US dollar 1950 is good enough, and we can utilize the immediate swing low as our stop loss, and for a risk of around 20 to 25 points on the lower side, we can target almost 50 points move on the upper side. So if we are going for entry anywhere in the price band of US dollar 1940 to US dollar 1950, the immediate target will work out around US dollar 2000 per ounce levels, and as I said, we will have the risk reward ratio which will be roughly 1 is to 2. So from conservative perspective we will be in a safer side. So that's it from my side for today's session. If any of you have any query or any idea to share, you can write it in the comment section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead and a fabulous weekend. See you on Monday. Goodbye.